Boy, that time flies when you're having fun, doesn't it, guys? Back in the action once again here this evening. Well, we survived Wacky Wednesday, Super Wednesday, as I called it in last night's newsletter. But you know what I always remind you guys? We're only as good as our next trading opportunity, so it's time to get back to work. Time to roll up those sleeves, because you know what time of day it is. It's about that time of day again. Time to get back at it. It's Wednesday evening. It's April the 10th, 2019. My name is Joseph. And as always, this is your nightly newsletter. Now remember, I help new traders find dependable, predictable, reliable, profitable trading opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities we see setting up for tomorrow. That's Thirsty Thursday, right? Thursday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and euro on the charts for tonight. I'm going to start off with that Texas tea tonight, that black gold, that crude oil futures, because as you probably noticed, oil is back on its horse. It's trying to make a move back to yesterday's high, but we've got some headwinds. It looks like we might be starting to get a little bit too high to buy up here. So let's jump into oil here first, because again, Wacky Wednesday, Super Wednesday, right? Lots of stuff going on today, and of course the markets quickly start off this morning by jumping right on their horse. And we talk about this pretty much every evening on this newsletter. Anytime you see a strong move in one direction, it was right very early in the session, we expect to see a second leg. So we got that second leg. That was pretty much right as expected. Beautiful failure patterns, right, into pullback patterns for that move going back up. The bottom line though is it's important to know where we are right now, right? We're definitely bullish. But look where the objective is, right? The objective is to get back up around this 64.70, 64.75, 64.79 area. So we're starting to get a little bit frothy up here. We're a little bit high, right, to want to start buying. So right off the bat, we know we really got to be careful being buyers here as we go higher. Now, of course, we got that strong move up, and you'll notice right now we've got this flag pattern coming down. Now, flag patterns are very, very simple patterns. They give me really two specific locations to look for patterns above and below that flag pattern. I'm also lining up this trend line here because you notice that trend line lines up beautifully with this little hidden channel we got going on. So this whole area right down here, this whole area around that 64.30, 64.40, boy, I really like this area for some buying opportunities. We've got some challenges though. I got a trend line coming down, so we're going to have to kind of thread the needle on this. I'm going to put together 3, maybe 4 patterns I'm watching for on the pullback. And of course, I'm also going to make sure you guys are ready if the market jumps here overnight, because I don't want to buy high up here. I want to make sure I look for specific entry patterns, right, as we go higher. And of course, you know me, I'll cover all the bases. We'll talk about if we get a reversal, what a reversal will look like and how we'll trade it. So if you're a fan of the black gold, the Texas tea like I am, make sure you make sure you stick around tonight for that oil report. All right, let's jump into the S&P now. Over on the S&P, of course, started off the session this morning, big move up, right, into a range-bound market. We talk about these patterns all the time, right? 1 try, 2 try, back up into that range, right? If I've said that once, I've said it 1,000 times here, right, on this newsletter. So lots of folks buying those dips here this morning, right, on the S&P. You notice now, though, 1, 2, 3 breakout, right? 1, 2, 3 breakout. So we got a breakout of that trading range. I don't want to buy high up here, right? What's the plan for a 1, 2, 3 breakout, right? We mark up that hidden channel. You're exactly right. So we're looking for a hidden channel here, and I'm looking for a pullback here right now. Got a couple levels I'm watching, especially this area right here, especially that area right there. And of course, what we'll do is we'll break down a couple different scenarios. I'm looking forward to buy that pullback, and most importantly, right, we've got some levels of resistance here overhead, right? Big round number we assume is the objective, and much like oil, right, I got to be careful being a buyer up here, right, as we go higher. So not to worry, I'm going to cover all the bases, right? I'll give you a plan for buying the pullback. We'll talk about if the market jumps, and we'll also talk about, right, what if this market dumps off this high? What can we do to trade that as well. We're going to jump into the S&P here in more detail as we get into it here today. The Nasdaq, right? The Nasdaq here, boy, small cap stocks really performing well here today in the face of the FOMC meeting minutes. Bottom line right now is we're obviously bullish. There's no question about that. What we do have to worry about, though, is the fact that we are 1, 2, and 3 legs up. Now, you may not be aware of this, but when the markets go 3 legs up, there's one distinct characteristic that usually happens whenever a market goes 3 legs up. We're going to talk about, right, kind of what to expect when a market goes 3 legs. We've also got a similar situation on gold, which we'll watch for in a moment. But the bottom line is we're definitely bullish. I've got some specific setups I'm watching here. 3 legs up. We'll talk about that tonight. And of course, obviously, right, I'd be lying to you if I said I wasn't looking for a pullback. We've got some hidden channels here. We got some reversal lines, right? This area looks great. And so we're going to put some finishing touches on what to look for in the early part of tomorrow. And of course, we're going to really dive into what we look for when the market goes 3 legs up as well. So stay tuned on that NASDAQ. We'll break down all the angles on the NQ. And then gold, right? We talk about 3 legs up, right? 3 huge legs up right now, right? 1, 2, 3. You can see this gold market, right? Every time it goes up, it gives us that range and pulls back. So, we're expecting to see a little bit more of that here right now, right, on the gold. Big thing right now is, right, we're right up in that 3rd leg higher. And again, like I mentioned, the NASDAQ, right? We'll talk more about this tonight as we dig into this video. But when I get 3 legs up, I always know I'm expecting a couple key components here. So we'll talk about that as we dig in. The big thing, though, is look at the strength of this thing going higher, right? Quite the powerful move. And, of course, anytime we see a strong move in one direction, we're expecting to see that 2-legged pullback, right, in that retest, right? Anytime we see a strong move in one direction, pull back and retest that high. So we're definitely looking for a pullback right now. I got some hidden channels on here. I've got some reversal lines on here. I've got a midline on. I mean, this stuff looks great down here around that 1310. So we'll talk about 3 legs up. We'll also talk about, obviously, how I'm going to buy this pullback, what to do if we get stuck up here. And obviously, too, with this big wide channel here, I mean, this thing might dump, right? This thing might dump off these highs. And so I want to make sure if we do get that big drop that we know what we're looking for, right? We saw a similar example right back there earlier. So we'll talk a lot more about that tonight on this yellow metal. But again, 3 legs up there on the gold. And then how about that euro? Boy, yeah, the kind of the neck breaker today, right, was the euro. I warned you guys. I warned you today it was going to be pretty nasty on the euro, right? We had Draghi with the ECB. We had Brexit, right, going on. Well, you can watch last night's news if you missed it last night. The bottom line is we're bullish, right, into a trading range. Right, we expected to be able to buy the low of that range today, but of course, classic example, right? Strong move down, right? Big strong move down. I want to buy, so what do we do? Nested 1, 2. Man, oh man. I mean, I know it's kind of scary as the market goes lower. We're not trying to buy down here, right? You're trying to run this thing back up. So if you were waiting for that pullback today and use the right pattern, my hat goes off to you. Really, really good job on that. The bottom line is, though, we're bullish and we're back into that range again. Bull market into a range. I'm looking for a pullback, right? I got a couple key spots I'm watching for. The big thing in the euro right now, though, is do we get a shallow pullback or do we get a deep pullback? Believe it or not, those will determine the type of patterns we use on this, right? Those will determine the types of patterns, right? Shallow pullback, deep pullback. If you know the difference there, right, well, kudos to you. If you don't know the difference between how to trade a shallow pullback and a deep pullback, we're going to dive into that tonight, right, on this euro. So I'll make you wait for the good stuff all the way at the end. So we got a great plan here on the euro. And of course, if it goes higher, right, we know that pendulum swing, right? That's our big target up there. So I'll give you some plans on how to trade up here so you're not buying too high, because we saw the last time they tried to go higher, right? That didn't exactly work out very well for those bulls. All right, so we got everything ready to roll here. Euro, gold, NASDAQ, S&P, and oil. But real quick, though, Before we jump into our video tonight and go over the entire strategy for Thursday morning's trading session, I want to remind you, make sure you never miss a newsletter by joining our mailing list. It's really easy to do. Just go right to the blog here at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video. And all I need is your name, your email address, and then hit that subscribe now button. Now, don't forget, though, when you subscribe to the list, remember, you've got to check your email, because not only do I need you to verify that I have the right email address, but I'm also going to send you a welcome email with a bunch of goodies in there so you can get the most out of our time together. So don't delay. Make sure you join the mailing list. I promise never any spam. I've got better things to do with my time, right, than to waste your inbox space, right, with spammy stuff. So you know me. I'm all about the good stuff here at School of Trade and Sideways Market. So make sure you join the mailing list. That way you never miss a video. And then I need your help today, right? I'm always asking for feedback, right? I need your help. If you watch this newsletter every evening, right, what's your favorite pattern? You know, we talk about two-try failures. We talk about nesteds, trap patterns, 1, 2, 3 reversals into hidden channels. Have you been able to apply any of these methods to your own trading? And what's been the most successful for you? You don't need to give away all your secrets, but I'd love to know, right, in your words, what's your favorite pattern that we talk about? What's been a turning point for you? Drop me a comment in the comment section below. It would mean the world to me to kind of hear how you're using this strategy on your trading, right? I know how I use it every morning in our trade room, but I'd love to hear back from you as well. And by the way, while you're down there, give me some feedback on your favorite patterns that we talk about. Give me a thumbs up on this video if you find value in this nightly newsletter. It helps me with YouTube and get more exposure, right, for more people on the YouTube channel. So I really appreciate your comments, and I really appreciate, right, you guys give me a thumbs up or a thumbs down, right, if you just absolutely hate all this effort I put out every day, right? Be honest, right? I will definitely take it, right, the right way. And don't forget, guys, right, I'm always asking for feedback, but I want to remind you too, you can always pick up the phone and call me in the office. Don't be afraid to call that toll-free phone number if you have any questions. You know, like, what's the best charting software? You know, how to get your brokerage account started? You know, what moving averages are best? Feel free to call me, right? I'll be happy to answer that phone and answer all your questions. That way you get the right information straight from the horse's mouth. All right. Although hopefully I can trade a little better than a horse here these days. Let's jump right in. Enough of the bad, corny trading jokes. Let's get to work here this afternoon. And I really do appreciate you guys, right, calling the office when you have questions. All right, tomorrow is Thursday. It's April the 11th. And of course, compared to today's session, tomorrow's going to be kind of a wimpy one, right? I mean, today I think we had pretty much every possible news event was scheduled for today. And I like it that way. You know, in my opinion, I'd rather have all the news events in one day. That way we have a wide open space tomorrow. Now, really, there are two big things tomorrow. One is inflation, right? We talked about this last night. We had CPI today, right? What did you notice about CPI this morning? Euro, gold, right? Currencies. So if you listened last night, you knew that CPI number was at 830, right? That's what took the euro all the way back down, right? So that CPI number is no joke. So tomorrow we've got the PPI number. Now, forget about jobless claims. Nobody cares about jobless claims. I mean, I couldn't even buy beer yet in the United States the last time jobless claims meant anything to us. I'm not joking, right? I was a college kid just about to drop out of school to pursue trading. That was the last time, right, that the jobless claims number, I mean, it's been a long, long time. I know, right? The good old days. Bottom line, though, is forget about jobless claims. That PPI number tomorrow morning at 8:30, right? These are the producer prices, right? It has to do with money supply. Money supply, of course, is everything that moves these markets around. So what are we thinking about tomorrow? Gold, currencies, right? So euro, pound, those are definitely markets you want to be watching closely tomorrow morning at 8:30. And don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. So we'll do it together, obviously. But if you're on your own tomorrow, PPI number at 8:30 Eastern time. And then it's really all going to be about how the market opens up at 9:30. How do they react to the FOMC minutes that we saw this afternoon? How do they react to the mega bank, hearing we saw this afternoon? How do they react to some of the big news events that came out in Europe overnight? So tomorrow's really going to kind of be a wait and see very much because, a lot of news was coming out today, and tomorrow's the day kind of where that big meal gets digested and then kicked out the other end, right? So tomorrow's going to be an interesting day tomorrow. I'm going to do my best tonight to put the plan together, but a lot of this is going to be kind of waiting to see how we get into that 9 o'clock, 9:15, 9:30. If I guessed right now, I would guess that the PPI number would be a little bit of a shakeup tomorrow morning, like it should be. And then I would imagine once we get through 9:30, 9:45, we're going to start seeing some really big opportunities, either for reversals, continuations, fading breakouts, 9:45 to 11:15 tomorrow. So I'm going to be there early, watching PPI with all you guys in the trade room tomorrow morning. But obviously, we'll be looking for the meat and potatoes tomorrow after the market really kind of digests everything. Because, we got a lot going on tomorrow still. Not as much as we had yesterday, but we got a bunch of Fed speakers you can see here coming in right at 9:30. Those might kind of pepper the markets a little bit with some headlines there. Again, 9:45 to 11 o'clock tomorrow, I would imagine is where we're going to get the big, reliable, dependable, predictable opportunities. And we'll do it together. We'll do it together tomorrow morning, obviously, in our trade room. So that's the schedule for tomorrow. Not a lot, as you can see here. Not a lot. And then we are literally going to whimper our way into Friday. Friday is almost a no news day on Friday. So we'll talk about that more in tomorrow night's newsletter, of course. But for now, though, we got some work to do here. Let's jump into that oil. We got oil, S&P, Nasdaq, gold, and euro. Now, the first thing I always do whenever I open up a chart is I always try to figure out, what type of day are we dealing with? What type of environment are we dealing with? Is it a range-bound market or is it a trending market? And ultimately, you can see this is a trending market. There aren't really any ranges. We had this, of course, this strong move up into what really is a flag pattern for most of this, right? It's pretty much a flag pattern there. And we talked earlier, what's the best way to trade a flag? Best way to trade a flag is to go up, over, and buy the pullback. It's kind of like that two-legged pullback pattern that I talk a lot about on this one. So think of it now as a bull trend into a flag, and the best way to trade that flag is up above that high, right? And remember, the key to a flag is to actually get that kind of big up and then back down. That's the key to a flag, right? So we're looking good for that pullback right now. But look closer, right? Look, strong move up. There's another flag, right? There's another flag. You can always tell a flag because flags are usually starting off with a big flag pull, big strong move up, right? We saw one back here. Oops, sorry about that, right? Big flag pull and this choppy channel, right? Same thing here. Flag pull, choppy channel. So what do you think here, right? How do we trade this one now? So now we kind of put these two together here, right? Now we know we've got this flag. We want to go up and over, but now we've got this one coming in too, right? So what's the best way to trade this one? Again, same thing, right? We want to go up, over, and grab it as well. So you can see here now, if we can time this right, we might be able to get this thing to go up, come over, and literally get the small flag and the large flag, right, all to come together, all in that sweet spot. Man, that would be amazing if we can get that set up here, right, going into tomorrow's trading session. I've also got this marking up these highs, right, marking up these lows. This could really get good, right, off this area. So that's kind of the idea that I'm looking for right here tomorrow. The other scenario would be we've got this real strong move up. So if we don't get that pull back and go, the next thing I would imagine is this thing will jump. And if it jumps higher, I don't want to buy high up here. So I want to make sure I look for some specific patterns, right? Like trap patterns, right? As we go higher here. So that's ultimately what I'm trying to accomplish. What's the most important thing right now? Most important thing is this trend line coming down. So let's say, for example, let's say we pull back, right? If we get that pull back, I want to go up and over and buy it. Now, it's probably not going to be that simple, just up and over and buy it. What will probably happen is we'll probably see something like this, where it goes up, the moving average comes over, it slices back below it. Everybody thinks the market now is turning bearish because it rejects. But what's actually happening is the buyers are trying to buy low. So now what we'll do is this is where it gets important. We look for those sellers to sell off that moving average, right? Remember, think about it this way. We go up, we pull back. Okay, at that point now, everybody thinks, oh my goodness, we failed. We're going back down to 60 or whatever, right? But it's not a bear market. You don't want to sell this market yet. We're not bearish yet. We're just pulling back in a bull market. So don't let that fool you. At that point now we have to assume we're going to probably get those sellers trying to sell into that pullback, right? The bears now will try to sell that pullback off the moving average. And in that case, we know exactly where their stops are going to be, and we can buy right into those stops. We call these failure patterns. Now, that failure pattern, you don't want to chase after it. You want to make sure you get into it right above that moving average, right when you get the right signal candle, right, to get in there. Then wait for the pullback. Moving average comes over, and we get that pullback now, and that pullback is the one that really launches usually, right? Usually the pullback is where it really, really hits it hard as it goes higher. So those are two patterns I'm certainly watching here right now. These are called failure patterns, and of course a breakout pullback pattern. Now remember, this all depends on one thing. It all depends on the market going up and then back down. But what if we don't get that? Like I said, we got a bunch of news today. What if we don't get that pullback? What's an option here? Another thing you want to keep in mind for a flag pattern is sometimes we go up and we just don't pull back. And my favorite way to trade this situation is the same basic idea of that two-try breakout pattern we talk about a lot, which is where I'm looking for that strong move up. I want to avoid buying high right now, and the way you avoid buying high is what? With a trap pattern. Now the key to this is don't just try to buy into a pullback. Look for sellers try once, look for them to try twice, and buy with a trap. This is a very, very powerful pattern, especially when a market is clearly as bullish as we are right now. But I don't want to buy high up here because, again, right, you've got yesterday's high, you've got this measured move resistance, the top of the channel. Just don't want to buy high up there. The best pattern to avoid buying high is going to be this trap setup, right? This trap setup. So, of course, let the bears try once, let them try twice. Notice how I do this, right? It's a higher high in price, right? We'll teach you a lot more about this. Speaking of which, right, in that free trading class, right? Because what I'll do is I'll put a link up here for you guys in the upper right-hand corner. If you want to learn all the details of these patterns, right? I want to make sure to remind you guys about this. Not everybody knows about this, but we have a free trading class here at School of Trade that will not only teach you about our 3-step trading strategy, but it'll also teach you about patterns, right? Like that trap setup. And again, I'll put a big red button below the video tonight on the blog. I'll put a big link in the upper right-hand corner here for you. So if we do end up going up, right, 1, 2, right, trap, and then go from there. So that's the pattern we're looking for, right, as we go higher. Now, how does the market reverse? What does a reversal look like? Because again, tomorrow is kind of a digestion day, right? A reaction day. What would a reversal look like? A reversal has to have 3 components. 1 is a strong move against the trend. 2 is a pullback to the moving average. Got to touch the moving average. And 3 is a strong move off the moving average. See, we get lots of strong moves against the trend, but you'll notice they don't hold the pullback. When they don't hold the pullback, what do? We buy into that failure. Simple failure pattern we talked about earlier. So if we do get that strong move down, moving average comes over, we want to see it test the moving average, jump off the moving average. Because, again, if it doesn't jump off the moving average, we will be looking to buy right into that failure there. If they do get that jump off the moving average, now what do? Well, now you mark up that low, you mark up the new channel. Okay, now watch closely. You draw it off of this high up here, right? So that high up there, that becomes your hidden channel. And now we're looking to sell, right, off that hidden channel high. We saw a great example of this on a couple different situations today in the trade room. So bottom line is, if we do get that reversal, it's got to be strength, pullback, strength. We call these 1, 2, 3 reversals. Where's your target? Target's pretty easy, back down to that 63.70 area there on crude oil. And again, I talk all about these patterns, right, in that free course, either below the video or in the upper right-hand corner, right, on this YouTube channel. All right, let's keep going. We have a lot more to cover here tonight, and I want to make sure I respect your time here. Over on the S&P. So S&P, very, very simple, strong move up, right, into a range. Now, remember, I always do this every morning. I open up my chart, and the first thing we look for is this a range-bound market or is it a trending market? It was a range-bound market today, right, on the S&P. So we go out, we come in, we're nasty, nasty range, right? It's a bull bias. We already know, we talk about this almost every night on the newsletter, right? Let them try once, let them try twice, and back up into that trading range. I will tell you, right, I asked you guys earlier, what's your favorite pattern? This is by far one of my favorite patterns, especially when you combine it, right, with the low of that trading range. Just a beautiful example there, right? They run back up, and then, of course, right, all hell breaks loose this afternoon as the FOMC minutes come out, and then we get the 1, 2, 3 breakout. Right? We talk about a 1, 2, 3 reversal back there on oil, right? Strong move up, pull back to the moving average, strong move off the moving average. That's the same idea as that 1, 2, 3 reversal I just talked about on the oil. So it's very easy to see 1, 2, 3 reversal. So now what do? We mark up these highs, right? Mark up that low. And what does that give us? That gives us now the spot, start looking, right, for that channel. So what I'll do is, let me kind of get this off here real quick. I'll line up these highs, right? Bring it down to that low for us. Kind of get that, right? Kind of get that slice a little bit thinner there. And obviously if this goes higher, obviously, right? If it goes higher, what I'll do is I'll adjust that channel, right? It'll be a bit steeper there. So, don't hold me to this battle zone, but it's that area, right? It's this area now that's where I want to buy that pullback, right? We're bullish. I want to buy at support. I don't want to buy at resistance. And if we go higher here, I'm going to be getting pretty heavy here, right? It's going to be pretty high up top here. Got the measure mover ahead. And then, of course, let's not forget, right, back to technically yesterday's high, right, but pretty much, right, last week's high here, right, early, or I guess Monday, Tuesday's high there, right? We had that end of the day on Friday. So we know where they're trying to go. They're trying to go back to that 2,900 right now here on the S&P, at least in the short term. The problem, though, is I've got 1, 2 legs up. This whole area up here, right? This whole area up here is really going to be considered a very lofty area on this chart. And since we don't really want to be buying high, I got to be ready for what if the market pulls back, right? And what if it runs up? So those are pretty much our two scenarios right now. We're obviously bullish. Now, what if it pulls back here for us? If we get the pullback, it'll be a relatively deep pullback. So keep your eyes open for a two-legged pullback. Down, up, down, right? If we do get that pullback, keep your eyes on a trend line coming down. And I can use that trend line in a pattern we call the two-legged pullback. And I call it a two-legged pullback because it goes one leg, right, two leg, right, two-legged pullback, and then up, right, from there. Now, the beautiful part is that you can combine that two-legged pullback pattern with that classic failure pattern, right? So we pull back, the moving average comes over, the sellers see this big move down, right, as being a bear market, right? Kind of like we saw back here, right? The strong move down, right? The bears think, oh, it's bearish. Let's sell off the moving average. And oh boy, right? That doesn't end very well usually for those counter trend traders. Same thing right here, right? 1, 2, and of course now we know where stops are and we can buy right into those stops. Now remember, right, we're looking to buy as low as we can go here on this. I'm not trying to buy once we see proof of the failure. See, that's the problem. And this reminds me of when I was a rookie trader. I would wait so long to get into a trade that by the time I was getting in when all the professionals were getting out. So it's one of the hard parts of trading. If you wait too long to get into the trade, you're buying really high now. Okay, so if you got to wait that long, don't trace after it get that moving average coming over, and it almost always gives you, right, that pullback, and that pullback will be kind of your next opportunity here, right, to buy nice and low. Okay, doing it that way, you're always buying at support, right? Always buying at support. We call these failure patterns into breakout pullback patterns. Very, very easy patterns. Just going to make sure we wait for them. Now, as we go higher here, right? As we go higher here, keep your eyes on a range up here. Okay, keep your eyes on a range. In fact, oftentimes we'll get a market go right up into a measured move like we have here. And a lot of times those measured moves, they'll just get stuck up here. And they'll sit and they'll sit and they'll sit. What you want to remember is the same basic idea we saw back here, right? This is exactly what happened before, right? We went up, so just look back, look left. You can see what happened here, right? It went up, it got chopped around to a range. Then what do? One try, two try, back in, right? Bears try once, bears try twice. What do we call that? We call that a two-try failure pattern. It's a very, very simple pattern. There are some nuances to it. I'll definitely be honest, right? There are some nuances to it. So we'll cover more of that in our membership classes. But the bottom line is if we go up and we start going sideways up here, what I like to do is I'll take the size of that range, right? The size of the range, copy and paste it down, and create support down here. So I'll create that support level down here, and then I'll look for that one, right, that two, and up from there, right? Go back over here real quick. If you take the size of that range, you copy and paste it down, see, it's right there, right? That's the same idea right here. Size of the range, copy and paste it down. What's always amazing about these markets is that, the patterns are never exactly the same. I heard someone say a long time ago, right? They're not exactly the same. They just have the same type of rhyme to them. They look similar, right? They're not identical, but they rhyme. They look very similar, right? So of course, let them go once, let them go twice, and buy into those stops. Now, what if this thing just jumps, right? What if it jumps up here? What would be the best pattern as we go higher? What I would look for is that same two-try breakout we talked about earlier on the crude, right? And that is the strong move up. Let the bears try once, higher high, try again, and you got it. Trap low. That is obviously the most aggressive pattern, right? But if you can get a couple big green candles here coming out of Asia, we might be able to get those sellers trying once, sellers trying twice, and buying right into those stops, right? I'm obviously going to be looking for that trading range up here, but if you want to get aggressive up here, though, that will be your best option, is that trap. So if you see that higher high, right? If you see it range out, right? Double tops. If it double tops, now you know it's a range. 1, 2, go. But if it goes up, pulls back, and higher high, ooh, yes. Now we know, mark up that low, and now you know exactly where that trap's going to be. And that's always the giveaway. If you get a higher high on it with strength, you know what you're looking for. You're not looking for a range. You're looking for a trap. You're looking for a pullback below that prior low. So that covers our bases here, right on the S&P. My only real concern for tomorrow is if the market completely collapses here, because if it collapses, this is a range. So if it collapses back down, I mean, in all reality, it could be a big pendulum swing back down. So if we get if we get this thing to collapse back down, what's the best pattern for me to buy below a range when momentum is really strong? You guys are good. The nested, right? The nested failure. Let them try what? Let them try once. Let them try twice. Yeah. I knew you guys were listening out there. What do we call those? We call those nested. And we saw a great example of that on the euro. So we're going to grab a look at that on that euro in a moment. So if it just collapses here in the overnight, it's going to be one hell of a bear move, obviously. But if we can stay, within kind of the gravitational field of that trading range, this could be a bloodbath in the overnight. And then the sellers try right one and twice, and then whoops, right back up again into that 9:45 to 11 o'clock hour I talked about at the beginning of this video tonight. So keep your eyes open on that, right? Keep your eyes open to this. I think at this point it will take a very big disaster here overnight for this market to tumble and keep going. But we will have a front row seat for that tomorrow morning, right, in our trade room. All right, let's keep going here tonight. There's a lot more to cover here. How about some Nasdaq? How about some Nasdaq? Now, I talked about this. I teased a little bit about this, right, as we went higher here, or as we went through the introduction here this evening. First of all, most important thing, we're definitely bullish. Not a range-bound market, right? Not a range. It's a bull market. It's a trending market. Whenever I have a trending market, what do we look for? 1, go with the trend. 2, channels. And 3, measured moves, right? So 3 basic rules for a trending environment. 1, go with the trend, right? I've got this bull trend. I want to buy. Where? I want to buy at support. Where's a good level of support? At the low of a channel. Got my channel. And then where are my targets in a trend? Measured moves. 1, 2, 3. Uh-oh. What does that mean? We're 3 legs up. Now, I mentioned earlier that 3 legs up can be a little bit of a challenge. Not really a challenge, you know, like any good contractor or woodworker or steel worker or electrician, right? Anyone who works with their hands will tell you, it just takes the right what? The right tools. You just got to have the right tool for the job on this. When we go 3 legs up, we almost always see a range-bound market. Right? It's almost like the market says, okay, let's just chill out a little bit here. Let the moving averages catch up, right? That's a lot of what has to happen, right? You get all these slower 100, 200 moving averages. They're going to have time to catch up to this market. That's the way I look at it. But the bottom line is usually when we see 3 legs up, we usually end up going sideways. Now, we just talked about, right, what the plan is with a bull market into a trading range up here. What was that plan again? The plan was to get the 1, you got it, the 2, and then buying right back up. And wouldn't that be nice if we can combine that with the low of the channel? And then look at all these levels right here. 1, 2, 3, that beautiful area right there. That is beautiful. Beautiful spot right there to be a buyer. So we're expecting to see a little bit of a range there, if my tongue can catch up to my brain right now. I swear, sometimes I have so much I want to talk about here in this newsletter, my brain just goes, slow down, slow down. Anyways, so we know we've got that. We know we have that big move going higher, right? We're expecting to see a bit of a range. What else is going on here? I also want to alert you to, again, we are right up around these frothy areas up here, right? If you're not careful, your nose will bleed. The air is so pure up here, right? It's so dry up here. The bottom line though is we go up, we pull back, we retest. What do we call this? We call this the market's objective, right? We're back at the market's objective. So we expect that although the price is going through this high, we expect that the reason the market went through this high so much is probably not because buyers were buying, but probably mostly because sellers were getting stopped out, right? Let's face it. There were probably a lot of people who got short, right, on this move lower. They had stops here, and those stops just got triggered, which I also want to bring to your attention too, if you look closely on this, look at this pattern right here. Look right here. Strong move up, bears try once, bears try, what? Trap low right there, right? What is that? That's that 2-try breakout, right? That 2-try breakout. So very good example of what we just talked about, right? On that S&P 500, right? So Nasdaq got it. Strong move up, 1, 2, higher high, trap low, and go. Okay. So we know we're in the nosebleed seats. We know we don't want to get too aggressive up here. And I'll be very honest. That's 1, 2, 3. I mean, in all reality, there is potential. This could make another run up here. But don't get too crazy about it, because that's going to be, not only is that going to be a triple or a quadruple here, right? That'll be 4 legs higher at that point. So I would consider this whole area up here to be a major target zone. You know, like I said, we get a lot of news today. Tomorrow's going to be a day of kind of reaction. And so we may see this thing kind of blitz higher here, right? If it blitzes higher here, just keep your eyes out for a range up here, right? I don't know where the range will be. The range might be here. The range, heck, for all I know, this could be the whole entire range right here. right? This thing could be setting up for a big range right now. The bottom line is I'm looking for a range. Once I see that range up here, then I know. And this is where some patience is going to come in here in the overnight and the early part of tomorrow morning. Once we have the size of the range, then we know we can, right, find those levels of support down here, right? We can grab those levels of support. And then, of course, we can look for that same pattern, right? That 1, that 2, and that go from there, right? So let them try once, let them try twice, and we're buying right into that failure here, right, as we go higher. I don't think it's probably a good idea to try that same 2-try breakout, right, because we just got it, right? 1, higher high, 2, trap low. That would be what I would say with the next pattern here, but probably not going to be a very wise, to take back-to-back with aggressive patterns like that. So if we do go higher kind of relentlessly, keep your eyes open for a new spike in channel, right? Up, back, and go. If we do get a new spike in channel, right, find that channel low, find that hidden channel, and we'll buy that pullback. But, again, it's going to have to be it's going to be pretty obvious this market wants more, right? This market will be foaming at the mouth, right, for that 6,700 big round number, or that 7,700 big round number, excuse me, right? You'll feel it, right? It'll be really, really peppy. There won't be any sign of profit taking up here. So we're expecting to see a pullback after a range, and that's ultimately now what we're waiting for. How do we turn bearish? What's a reversal? Reversal is strong move down, yep, pull back to the moving average, got it, and then what? Strong move off. Remember, if they don't get that, that's your failure, right? That's your failure into your pullback, okay? But if they do get it, right? If they hold it and run, target, of course, is back down to that 75. We mark up these lows down to those, right? Down to those lows. And then again, up top, right? Grab that hidden channel, and you're good to go from there. All right, looking good there on the Nasdaq here. Nasdaq leading the way here for those E-minis. We'll see if the S&P, right, will do the same here. Boy, gold market now, right? Quite the big move up here on gold. Let's zoom out a little bit further here for you guys, because you can see here right now we're up there, right? We are definitely up there, right? We got 1, 2, 3 big legs. This is an extreme case of a triple measured move, a 3-legged move, right? What do we know about a 3-legged move? We know it usually goes sideways, right? We know most of the time a 3-legged move will end up going sideways. Sometimes if that third leg is really small, you'll get a 4th or maybe even a 5th leg, but general rule of thumb is if you see 3 decent sized legs, right? I'm not talking about small, little tiny legs on this. I'm talking about, these are 3 big legs, right? You get 3 big legs on this, you're going to probably be going sideways, right, the following day. Now, we got PPI number tomorrow morning, 8:30 Eastern time. So obviously this could get pretty interesting into that news tomorrow, but we're expecting to see, right, a bit of a range-bound market. At the same time here, right, and we talked about this last night on the newsletter, right? Last night we talked about how important it was going to be to come back, right? Get the low of that channel. I didn't get that reversal line, right? We didn't get that reversal line we're talking about from last night, but we went knee deep into the low of that channel, and of course, right, that failure into that rally back higher here. So we are coming off the low of that big channel, and here we are right at the high of that big channel. So not only are we 3 legs up, we're also the high of a very wide channel. Now, so we know we don't want to buy up here, right? Okay, we've come to that conclusion enough. We don't want to be a buyer up here right now. We want to be a buyer, but we don't want to buy too high. Now, let's zoom in a little bit closer here. Let's get a little more intimate, right, with this chart here tonight. Okay, what's the first that stands out? The first thing that stands out is big, strong move, right? Big, strong move. So anytime you see a strong move in one direction, what do you expect? At the very least, a retest of the high, right? At the very most, a measured move, right? A 4th leg. And so now you know how to measure it off those prior legs that I showed you already. We'll do it together tomorrow morning, obviously, right, in that trade room. The bottom line, though, is strong move. I'm expecting a retest of that high. I just don't want to buy high. I want to try to buy nice and low here. Where can I buy low? We got to find some support levels. So I love hidden channels. I mark up these highs, bring it down to that low. That's a level I'm watching, right? That's a level I'm watching. Then we go up, double top, right? Yeah, draw that up there. These are very, very common where you go up through a major resistance level, back down to it. It's always amazing how well these kind of untouched or, untested, pardon the term, the virgin, right, reversal lines here. I call these reversal lines. And you'll learn more about these reversal lines, right, in that free course, right, that I mentioned earlier, right? So again, I keep talking about this free course. If you're just tuning in right now, I talk a lot about how to use reversal lines. There's a big red button below the video tonight and that link in the upper right-hand corner. So we really like this whole area down here, right? Bottom line, get reversal line, lower the channel. I like this whole area here. Really at this point now, I'm just kind of waiting to see what we're going to get. We might end up with that big PPI number here overnight. We may end up getting it, continue here going sideways. If that's the case, we'll wait patiently for the 1, the 2, and the go, right? Let the bears try once, let them try twice, and then back up from there. Or, maybe we get a pullback right away, right? Maybe it pulls back right away. Draw that trend line down. You got this stuff. You got this, right? Up and over, and the buy back up from there. That's an option as well. So we just want to get this market to pull back here right now. Now, what if it goes higher? Right? What if it runs higher here? What's the plan here? There are ultimately two different things I look for when the market jumps up like this. One is going to be that 2-try breakout, right? Jump up. Key is big, strong move here. 1, higher high. 2, trap low and buy. Okay, this is for all you wooden roller coaster guys and gals, like a little bit of risk in your life. Right, like sticking your tongue to the the frozen pole, right, in the wintertime. If you like a bit of danger, right, a little bit of risk out there. If you enjoy hot air balloon rides, right, and tilt-a-whirls at the carnival, this is your stuff right here. You couldn't pay me to go to that ride right now. Anyways, bottom line is, right, 1, 2, and I'm looking for that move going back, right, up to retest. The key is obviously strong move up, right, 1, 2. Strong move up, higher high. Remember, bears want to sell high, right? They don't want to sell low. Okay? Bears want to sell high, and then, of course, it's that trap low for that buy up. A more conservative breakout would be a 1, 2, 3 break. You got it. Find that new channel, mark up that hidden channel. Now we know where our sweet spot is, and we're trying to buy off of, right, that low. So that's going to be our strategy there, right, if we do get this market going higher. So now we've got pretty much all the bases covered. One thing I haven't talked about here, obviously, right, is that reversal. What would a reversal look like? Well, see, a reversal in this example, I don't think a reversal really does very much for us, because if we do get that reversal, we end up right back at the low of this channel. So remind me again, guys, you guys are paying attention, right? Remind me again here, if we do get this thing to really tumble here and the market kind of turns bearish, we're right at the low of this channel now, right? This big bold channel, the same bold channel they came in and bought off earlier. What would be the best pattern at that point to buy it? It would be a nested. You're exactly right, right? It's a 1, it's a 2. This one, I will tell you, this one requires patience. This pattern definitely separates the rookies from the pros, right? Rookie traders have FOMO, fear of missing out, and they get in too early. Rookie traders just haven't been around long enough, to know what to wait for. Experienced traders, they have patience, and patience. And guys, that's one of the biggest reasons why trading with somebody who has some experience, this is why our trade room is such an important part of being a client with me, is because, I can teach you the strategy. The strategy is really easy to learn. We use 3 steps, 4 simple patterns. Again, you'll learn more about the whole entire strategy, right, in that free course I mentioned earlier. The bottom line, though, is that the strategy is simple. It's very easy. What's not so easy is sometimes the markets do things you're not expecting, and then you've got to quickly shift things around. In the meantime, there's money on the line, and so oftentimes that combination of, some unpredictable markets, the uncertainty of trading, combine that with the fear of loss or the excitement of winning profit, that's what really kind of clogs up the system, right? It is. And that's what makes our trade room so important. That's why I always recommend for new traders. Even if you don't trade with me in the trade room each morning, find somebody with some experience, because as a rookie trader, all your emotions, right, are going to fire off at all times, and it's very difficult. It takes a long time. It took me a long time to really get to the point where I knew what I was looking for, and I was willing to wait all day to get it. So this pattern down here, right, long story short, takes a lot of patience, because you've got to let it pull back, and it's going to look like it's going to keep going lower here. Let them try once. Right? Don't take that move up at that point, because it's too bearish at that point. Let them try twice and then let her rip, right? Once the nice signal candle, you're buying right into those stop losses. The sellers are roped in. The buyers are loving on it, and price will usually rocket right back higher. We saw a great example of that earlier on in the week. We saw that big move down. The bears tried once, the bears tried twice, right? And then up we go. Everybody leaves, right? All the bears bail on it, and the market rallies higher. Same basic idea looking for here tomorrow morning if we get that deep pullback. So now you guys are really prepped up and ready to go here. Wrapping up tonight on the mighty euro. Of course, I always ask myself, is this a range? Is it a trend? What are my market conditions that I'm dealing with right now? And it's very easy to see it's a range-bound market. Now, range-bound markets always tell me to buy low, to sell high, to avoid the middle like the plague, or if you're in the U.S. right now, like the measles. Right? I'm half joking with all you parents out there. That must be scary right now. The bottom line, though, is that we have a bullish bias. Right? Got a bullish bias as we go higher, right? That tells me that buying the low is the way to go, right? Buying that low is the way we want to be trading this market right now. So I'm looking for that pullback. I want to see a pullback. I want to buy that low. At the same time here, I've got to be very careful being a buyer up here, because, well, look left. Look what happened the last time they tried to buy up there. That didn't work very well, did it? You know, it did not. So knowing that we don't want to buy high up here, we've got to look for another couple ways to trade this. So first of all, the big move down, right, with that beautiful nested, right, strong move down. This is exactly what we just talked about on gold, guys, right? It goes down, one try, two try, back up, right? Again, they're not always exactly the same, right? But they'll be similar, right? The key is it goes down. The bears clearly try to sell once. They try to sell twice. You can see those wicks right at the bottom as the market slides right back up here. Beautiful example of that same nested pattern we talk a lot about in that free trading course. So now we get that big move back up. The amount of the move below the range is oftentimes the amount of the move above the range. That's the big target up around that 13, right, 750. That's the big target here now as we go into, right, tomorrow's trading session. The only problem is if we go higher, I've got to be very careful here, right, buying that high. And I also want to keep my eyes open, right, to be a seller off that high too, because again, it's a range-bound market and I want to sell high, right, at above that trading range. So let's talk about this. In my opinion, there are shallow pullbacks, there are deep pullbacks, there are breakouts higher, and then there is the failure back down again. Let's talk about each of these setups here. One is going to be the easy one, right? The pullback, the two try, right? Pullback, the two try, and the failure back up. Right? That I won't go into too much detail about this one again because we've talked about this many times already today. The second one would be that deep pullback, right? What do we do now? Yeah, 1, 2, you got it, right back up. Nested pattern. You guys are experts on those now. What if we go higher here? Lay it on me. What do we got? Breakout, right? 1, 2, breakout, up. 1, 2. Remember, very strong, right? Very strong, very strong. Strong. The way that I describe it to my clients is that it needs to be so strong that you go, whoa, right? I call it the leaning on the keyboard strength. You know what I mean? You're sitting there, you're waiting, and all of a sudden it goes bam, right? And you lean, what do? You lean on the keyboard, right? You're like, whoa, that's a big move, right? That type of breakout is what you want. It needs to be boom, right? Big move up. That will set the momentum. Now we got to make sure we buy low. We don't want to buy high up here, right? You buy high up here, it'll pull back, make your life miserable, and maybe you'll be lucky enough to get some profit out of it. 1, 2, again, higher highs. Remember, bears want to sell high. They'll try once, they'll try again, then trap low, bingo, right? And up from there. That's probably going to be the only real option as you go higher here, because if this thing jumps up and then we get basically, if we don't see a higher high on it, we'll call this a nested for a sell. Strong move up. Buyers try to buy the pullback once. They fail. Buyers try to buy it again. They fail. That's your sell right there. Now, what I'll do is, if I'm going against the trend on this, I'll look for what we call the crown reversal, which is the 1 try, the 2 try, the trap, and the go. These are almost bulletproof setups when you're going with the trend. They're still very, very reliable against that momentum, right? Again, remember, it's bullish here today. So if we go up here, right, 1, 2, trap, and go, those traps are gold, right? Traps are gold, because at that point now, the dip buyers are buying once, the dip buyers are buying buying twice, even the breakout buyers, right, are getting caught buying that breakout. I'll tell you right now, honestly, I used to make that mistake. I used to be the guy who bought that high print when I was a rookie, and that's how I learned this pattern. I learned this pattern because what I would do is I wouldn't buy down here, right? I'd wait to buy up here. And of course, I get filled. You know the drill, right? Literally the candle goes like that, right? And your entry's like right there. And you're going, oh, God, are you kidding me, right? Could I have bought at a worse price? That happens a lot in these big, and again, these are inexperienced traders that are trying to buy in the wrong location. I think that's why I'm a good teacher. I think I've made every mistake in the book. I think I probably have, and I think that's why I'm a good teacher here. And hopefully you guys are learning from my mistakes, so you don't have to have 3 blown accounts like I did. You don't have to, keep going back to the drawing board. Like I mentioned last night, you guys aren't rookies anymore, right? You guys are expert. Well, maybe not experts yet, but you're definitely not those inexperienced dumb money they talk about, right, in the trading books, because now you know the difference between chasing trades, momentum, how to use the moving average, how to catch people on the wrong side of the market. Man, oh man, oh man, we are just getting this party started here this year, and boy, oh boy, great job tonight on the newsletter. Tomorrow's going to be a pretty interesting one. Like I mentioned earlier, big news today. Tomorrow might be a little bit of that reaction Thursday. Remember, PPI number tomorrow morning early at 8:30 Eastern time. Gold, euro, currencies. Watch out there early, and come see me. Like I mentioned before, right? Having the ability to work with an experienced trader, because the strategies are simple. There's a lot of great strategies out there. It's not the strategies that are difficult. It's the markets that get complicated. And I'll tell you, when you've got a really big mountain to climb, like the financial markets, it helps to have a good guide. It helps to have all the right tools, and it helps to have a map, right, of how to get where you're trying to go. I provide all of that with all of our clients here. We got beginner, intermediate, and advanced classes. I got a great free trial right to the left of me here, that big red button right next to my ugly mug. Grab that free trial. Come join me as a guest in our trade room for a couple hours here this week. I'd love to have you there with me, answer all your questions, and show you what I mean, right, when I say trading with an experienced trader is worth every penny, right, of investment for it. So guys, as always, I know I'm taking up more of your time than I probably should right now, but thank you so much for tuning in every evening. We survived Super Wednesday. Tomorrow, Thirsty Thursday, right? Thank goodness for Thursday, right? We're definitely looking forward to tomorrow. It's going to be a great day tomorrow. If I don't see you tomorrow in our trade room at 8 o'clock Eastern time, I'll see you same time, same place tomorrow night on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.